Hey, what's going on everyone? Welcome back to another PrimeXBT leverage trading video. If you have not used PrimeXBT before, please check out my other videos. Creating a whole educational series. I want this to be one of the best educational series on YouTube for leverage trading. If you ever have any ideas of anything you want me to cover, please post in the comments below. All right. If you've never tried PrimeXBT, I also made a tutorial you can find up here in the card. If you want to join, there's a referral link down below as well. If you use the code Gooner, you will get a 50% Bitcoin deposit bonus up to 1 Bitcoin. I've got a very special video planned for you guys today. It's my friend I'm_Goomba on Twitter. If you've never seen his content, make sure to follow. He is a very big user of forex for trading, and I've always been very curious to learn this. So you guys and myself, we're going to learn something today about using forex and how to execute leverage trades based off of them. Let's send it over to Goomba.
Hey guys, it's Goomba here. I've been asked by my friend, the Gunnar from Nebraska, to go and do a little video on fork, aka Chuvasho forks. So that's what I'm doing. I'm doing that on an iPad this time around, so bear with me. It might not be perfect, but we'll see what we can do. Where do we start? So Chuvasho forks, in my mind, are a tool that you can use to find trend reversals. So when the price has dumped a fair bit, like for example, we can see here, we'll try to fit a fork on there. Then it's time to look for an entry to go the other way, and forks help to do that. I also pair the forks usually with Fibonacci tool, just because I like to aim for 0.618 retracement. So we'll see as well how we fit that in that strategy. So what we can do is do a little bit of hindsight charting here. So I have Ethereum on the 12 hours, and there was a little up move there, and right around that area, you know, as you have a higher low, and then things start to compress a little bit here, you expect a bit of a change of direction. You know, it starts to get heavy there. So when you feel like the chart is heavy, then it's time to go and put a little fork on. So the way I would do that is find your anchor point, your first low, which is down here. And then I would go and link that to the next low. This one is fairly clear. I think it's here. So you simply link the two, extend it a little, so you can see the connection point here. In that instance, funny enough, I didn't notice, there's another connection point here. Now, when we go and do a fork, we fork from the last connection point. That would be, in theory, this level, but I'm not going to use that, because if you go if you go and draw something from here, the next low is there. I mean, you know what? You could have used that. It's not great. You could have used that. That leads me into a question that I have a lot of the time. You know, what's the science behind? Is it what are the rules behind? There's no fast and hard rules behind this. It's an art more than a science. For example, one of the first discussions that you could have, or debate you could have, is should you use wicks or not? I use the wicks. I know that it's not everyone's cup of tea, but that's what I'm going with. So back to our hindsight charting. You know, I think something I would have charted at the time would have been the fork from that point here, and then next low is here. So I would just connect the two, and that would have given me my fork. So how do you trade a fork? You have the first trend here, which breaks up here, and that tells you there's now a weakness. And you go and check that weakness by seeing if a second trend, so from here to here, holds or break. So from here onward, we have a trend. Here it's being tested, bounces off it, and here it breaks. There's even a little retest. It's not super clean, a little retest, and then we go down. So I would have traded from here. That's the break I would have entered to go down. Now, where would have I targeted, or where would have I taken profit here? Well, I use Fibonacci, as I said earlier, and I take it from the start of the fork all the way to the high since we've been, since we've started the move. So the high of the move is here. There you go, right about there. And so there wouldn't have been too much in that trade to go with. There you go. Let's measure that. somewhere an entry here after the retest, TP here. Oh, sorry. Well, that's a good 10%. Oh yeah, okay. I'm on 12H. So there you go. Decent trade. That's done in hindsight. I didn't take that trade, but there's one that we might be able to take in the next little while. So let's see. Let's clear that out. The next trade I could look at. So the chart has been going down there for a bit. There's a bit of a double bottom action there. It sounds like it's time for a reversal. So let's see if we can do that. I would start my fork here. I think the next high is here. Maybe one here, we'll see. So I'll start with this. And that first trend is just about barely broken out. So we might change resolution. Let's move on to 4H. There you go, clean that up a bit. So starting from here, I don't want to go through wicks, so I'll go through this one. And I think that's our first trend. And the second one would start from the last clean connection point, which I'm gonna guess is here. There you go. So that's my first draft of the chart. Now, if it needs to be amended a little bit, I like to move to HA candles. And what does that give us? So I think that hints to these last bullish candles there being the connection. And then the next one down here. So linking the highs of HA candles, because we're doing a bearish C fork here, so we're linking highs, is a good option. And it has a good record in my experience. Now you could say, if you didn't like wicks, you could remove those wicks and just move something like this. That's valid as well, I think. So it gives you an earlier entry because price will be breaking that earlier. Switching back to our normal candles, what do we have? Yeah, I quite like that. I quite like this one. So here, I don't have any fast and hard rules. I cut those wicks, that's fine. If candles have moved over it, it would be completely different, but a wick, I'm okay with it. There's clear rejection here, clear rejection here. So I'm happy with that fork. And now when we go to fit our fib, I'm gonna start. So most people would start that move from there, right? Because that's the high before the crash. But I'm going to use the source of the first point of my fork, which is here. And actually I find, again, from experience, that gives you a better, more accurate target. So that's the bullish C fork for ETH. I would start to trade that whenever price goes over here. So it's very simple. You just go and put a little alert on this, crossing up. We're on 4H. You could maybe, so I would wait for the price to close above it. So that's why I'm selecting this option here. You could maybe change to 1H or 2H before you go and set up the alert, just to have a little bit more of an early signal, because 4H you could maybe trigger here. If you had a 1H, you could trigger a little bit closer to it. It's very likely that price will break out and retest the fork before moving on to 2263. So when there is an alert, you can maybe start to step into your position, but do expect in the majority of cases for there to be a retest. And then on the retest is where you would add the rest of your position, going all the way to target. That works on every time frame. That works in my experience again on every asset. One of the forks I was looking at earlier today was Bitcoin dominance. So actually I charted that and it's posted somewhere on my feed quite a little while ago. And that's looking at Bitcoin trying to regain quite a bit of dominance over alts. So it's following the plan so far. There was a nice little alt season there where BTC was losing dominance versus alts, bottomed out here, drew a bit of a fork, so it's not super clean. You could have gone maybe for the week here. You could have gone, we could have respected that first week, which is what I chose to do here. So it gives you a slightly different entry. But anyway, we saw a break, we saw a little bit of a retest. And now I believe it's on the way to 53%. So we shall see. But just to show that it works in any direction and it works on any asset and any time frame. Okay, so another thing that you want to keep in mind is what is and isn't a fork. So I see a lot of people, for example, draw something like this, find the main trend, which is here, and that's fine, that's completely valid. But then they decide, so so we've been going down here, so that would be a bullish fork, right? So what we want is for a trend to start from here and end up somewhere there, and then wait for the break to go up. But what people do is draw that other trend, which is also a valid trend, and call this a fork. Well, that's not a fork. I think, I don't know what it is. I think it's called inverse bar. I've seen people reference that lately. I don't use that. What I would do there, if you find yourself in that position, is take the smaller trend as your main one actually, and then move that here. And there you have a little C fork that you can work with, right? And so if we go and fit the fib there, there you go. There you go. So you would wait for price to move over there and then end up at 0.33 cents for Doge. Right, so that's it for the C fork. Practice, try out. I'm reachable for questions if you have any. And best of luck. Take care.
Really hope you guys enjoyed that video. Make sure you follow Goomba on Twitter and subscribe to my YouTube. We've got plenty more leverage trading educational videos coming out for you soon, so stay tuned.